like I said, you've been one of those people that I'm taking my time to like deliver wherever it is that I'm supposed to deliver. So today we're going to be rounding up anything that has to do with direction and execution at the same time. So and then quickly we can jump into the model we're going to be using for entry criteria. So I believe and I strongly believe that you have understood key levels and how to establish a storyline. So um, if you've successfully understood how to establish a storyline, secondly, we're going to be talking about when a storyline starts, how you can easily execute off that storyline. So there are a lot of method of execution, and that's where a lot of people are failing. So when you take your time to pay attention to this, that's when you are going to get it quickly and you're going to get it straight. So I'm going to give a line drawing first on what you do first when you have a storyline, then anything else can come later on. So this is the daily time frame on gold, and whatever it is, the first thing you want to do whenever you are trading, first of all, like I said, the first advice I give to any other person or anybody, there's coming, right? So what you do, the first thing you do, everything we've taught before is just for you to have an idea of what we are going to be talking now. So now, anytime or anything you want to do on the chart, the first thing you always do is the same, and this is the idea I want to give you now. So any day you come into the chart, you are looking for a rejection that happened that particular day. What I mean, if you wake up in the morning, right? If you wake up in the morning and today is Tuesday, we are looking forward to today, Tuesday, when the Tuesday candle opened at midnight. Where did he reject from? Now, the interesting thing about that logic is that if there is a key level here, right, we expect that anything at night, the market must have done whatever it wants to do and reject. So the direction of the day is likely going to start during London session. And so that's where you want to be a participant in the market, right? So if you wake up in the morning, today being Tuesday, if you wake up in the morning, today being Tuesday, so you want to see that particular Tuesday, what the market has done that particular Tuesday for you to use and execute, right? So first thing you do every single day is you look out for rejection. So if you wake up in the morning on a Tuesday, you look out for where the market is rejecting from this Tuesday, and you try to establish your storyline that particular day. Now, let's say you wake up on a Tuesday and the market is rejecting from a certain bearish level, like this. So you have a daily key level right here. That's if you're an intraday trader, you have a daily key level right here coming. Then at that particular day, market comes into the daily key level, rejected, and give us a breakout. Now, as an intraday trader, basically, there are different things you look out for when the market rejects from a certain key level. Now, the first thing we look out for when the market rejects from a certain key level is a breakout on the H4 time frame, or a breakout on the H1 time frame, or a breakout on the daily time frame. So these are the things we look out for. If we have a daily key level, market trades into the daily key level, we are going to be looking out for a breakout on the H4 time frame, which is the main consistent system we look out for, right? So if you have a breakout here on the H4 time frame, the meaning we have established a storyline. Now, this is where the interesting thing comes in. Now, at the moment you establish a storyline, you are looking out for different things on the market. Establishing a storyline is not as difficult as looking out for what you want to see next on the chart. So before we go deep into anything, we would like to go into the daily time frame of some certain pairs, and then we look out for some storylines so you can easily understand what I mean. So if you wake up in the morning, what you're going to be looking out for every single day is what the market has done that particular day. If you can't find what the market did that particular day, then you go one day before and look out for what the market is doing one day before. So S&P has not been consistent analysis, but yeah, let's try. So what happened here is you wake up in the morning. Look at this one now. Look at this. You wake up in the morning right here, and you're looking out for where the market is rejecting from. Now, this one, look at this green color. Look at the way the market dropped down. When the market dropped down as of that time, you'll be looking out for, did the market reject from here? Yes. Now, how do you pick out the key level that the market is rejecting from? Mark out the entire week and drag below behind. Then you look out for the least one and then you mark it out. That's where the market is rejecting from if you go below. Right? Market is rejecting from this certain key level. Immediately after the rejection, you go into the H4 time frame and you look out for a breakout at that particular point. Now, after the market finished, the market gave us a breakout right here. Okay, which is a type 2 breakout and it's not too consistent. Okay, so this is where the breakout happened. And after the breakout, market traded up into another certain key level and then started dropping. Okay, so if you pay attention to the exact place, I'm just trying to show you how you establish your storyline before we go deep again. The same thing, the market traded up coming to this key level. So immediately after the market traded up coming to this key level, you are not supposed to be looking for this buy again. You are not interested in the buy. Rather, you are interested in selling if the market gives you up H4 breakout. So when you come into this, we are going to be using this as an example because I feel like it makes a lot of sense. There's a QM, overlapping with the QM. So market give us a daily, reject daily right here. So I'm going to be marking out our daily key level. So we have a daily rejection right here. Daily, reject daily. Now, after the daily rejection, we are going to be looking out for 4-hour breakout. Now, the market dropped down and give us a 4-hour breakout type 2 right here. Now, before the 4-hour breakout type 2, we can go into the 1-hour time frame and look at also a 1-hour breakout. Meaning, if you have a 1-hour breakout earlier, we would have been participating in the trade earlier. This is basically my model 3 right here. But regardless, let's just look at the 1-hour breakout occurred the same time as the 4-hour breakout. So what have we done right now? We have established what? A direction, meaning we are going to be selling toward down to this external liquidity right here. So we are going to be selling down because we have a daily reject daily and a what? 4-hour breakout. Now, let's go back to our diagram right here. Now, after that particular thing, what are you going to be doing? Now, you're going to be looking at zones. After that particular thing, you're going to be looking at zones. Now, after you have a 4-hour breakout, before we go talk about any model right now, that's what I'm talking about. Before you talk about if a model this show, you do this, no. For now, generally what you do, when you just have the direction, the next thing you pay attention to 3 key levels. Now, the 3 key levels I want you to pay attention to are QM, Apex, and OCL. Anything that is not QM, Apex, and OCL, you don't have any business with it. If Apex has been mitigated, you pay attention to QM. If QM has been mitigated, you pay attention to OCL. If all of them have not been mitigated, you pay attention to all of them. That is what is going to lead you to model 1. Simple. Okay, that's what is going to lead you to model 1. So now you have a daily reject daily, remember? You have a 4-hour breakout just below here. Now you pay attention to some certain key levels. Did I say RBS? No. Did I say SBR? No. What you're paying attention to is 1, QM, 2, Apex, 3, if there is an OCL right here. So now let's go back into the chart and then we see what the market presented to us after the type 2 breakout, right? H4 time frame. Now, from what I said, we have a type 2 breakout. Now, immediately after this type 2 breakout, what do? We look out for, this is where it breaks out before this next candle. That same day, don't wait for it to reach next day. No. Now, this key level here, which is an engulfing cell in form of a CLT, has been mitigated already. Do we have a QM? Yes, this is the QM. Has the QM been mitigated? Yes. Meaning we don't have any other fresh key level. Apex mitigated, QM mitigated. The only fresh key level you have left is this OCL right here. So now, you are going to be using this OCL, but you are going to be refining the OCL. So you can box it out like this because all the key levels have been mitigated. We'll talk about scenarios that all the key levels have not been mitigated, right? You can box it out like this, then you go into the 1-hour time frame. All you need is, if the H4 is fresh, you refine it to the H1 that is also fresh. That is all. Now, just from the H4 time frame already, you should know that your stop loss should be 2 pips above this particular zone. Before you even go to the 1-hour time frame, you know where your stop loss is supposed to be. Now you go down into the 1-hour time frame. On the 1 hour time frame, you look at a zone like this. So the zone on the 1 hour time frame is so much haphazard, like it's not showing us any clear price action. Now, how do you execute? I'll tell you two ways. The first way is you can directly execute from the H4 time frame with the OCL right here and just use it. Secondly, you can use the 50% of the entire box right here. These are the two ways you can execute if the 1 hour has been mitigated the way you see it that way. Let's check the 30 minutes if there is anything that makes sense. Beautiful, accurate, excellent. Like, I mean, excellent. On the 30 minutes time frame, just look at this. Engulfing buy candle, just place your entry here because you have refined it now. You have your liquidity right here, making it look like a beautiful structure, right? And then you execute directly from here. This is the general method of trading the entire doctor system without using any model. Generally, how you pay attention to it. This should have been your trade. What did we do? Step by step. Daily reject daily, 4 hour breakout. Now, even if you have 1 hour breakout, you are going to still be using 4 hour key levels to sell. Put that one at the back of your mind. If you have daily reject daily 4 hour breakout or 1 hour breakout or daily breakout, you are using 4 hour key levels to sell. Yes. If you have weekly reject weekly daily breakout, you are going to be using daily key levels to sell. That's it. And I'll just look at how this thing makes sense. Make pure sense that you use to capitalize on any type of move you want to capitalize. And I didn't even check it. I just came and saw it on the chart. Okay. So what we discussed about is not hard. I would go through it again. So you can have a sneak peek of what I'm sharing this year. Okay. It weighs everything I'll be writing. Okay, look at it. So this is it. Remember, whenever you come on a certain day or on a certain week, you want to see if it's a weekly time frame. Let's say, for example, there's a weekly time frame. On the weekly time frame, if this is second week of February and you have a rejection, you want to see the breakout that second week of February, maximum the next week. If it passed next week, you are not interested on the trade again. You want to check for another different rejection, right? So basically, this one I use the daily time frame because I'm a daily time frame monger. I trade more of daily time frame. So daily reject daily 4 hour breakout. If 4 hour breakout, what do you pay attention to? QM, Apex, or OCL. If QM has been mitigated, check for Apex. If Apex has been mitigated, check for OCL. If none of them have been mitigated, mark out all of them. When you mark out all of them, this is where model one comes into play. Okay, let's go back to that example and let's assume none of them have been mitigated, or let's go back into the chart and check if none of them have been mitigated. So we'll give another example. So market dropped down very low. The next day, dropped down very low, disrespected this key level, blah, 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 dropped down into this zone. Now, when the market dropped down into this zone, the next day the market opens again. Let's see where the market rejected from. Okay, not this. So the market rejected the next day. I'm looking for a suitable key level that the market used. I can't find it. So we don't know where the market rejected from. We'll look for another rejection. Market come here, drop down, rejected from this. Okay, let's take a look at this. Or let me use this. Okay. I think this one is going to look better. Market traded into this key level, give us a rejection. We go into the H4 time frame. On the H4 time frame, we have a breakout already, type 1. So this one doesn't look too nice. So I'm looking for the one that after the breakout, all the key levels are fresh, so we can have a better example. All the key levels are fresh. Okay. But before then, let me talk about this. This one is going to make sense to you. Now, this is the general method of how you can execute on the chart, right? If QM has been mitigated and Apex, you use the remaining one that is not mitigated and refine it into the lower time frame for you to execute. If none of them have been mitigated, okay, you now exclude. If QM has not been mitigated, Apex has not been mitigated, OCL has not been mitigated. Now, there are two ways of executing also. You can substitute OCL and pay attention to QM and Apex. Now, what do? You now not pay attention to QM OCL, so I'll delete OCL. You are now paying attention to this and this. Now, what you do is on the H4 time frame, you mark out your OCL like this, and you mark out your apex like this. Now, when you mark out your OCL and your apex like this, then you pay attention to the QM. Go into the H1 time frame. If it's fresh, then you're going to be executing from the QM automatically. You are not going to be waiting for the apex. Simple information, okay? I'm going to be repeating the same information, right?
Okay. Yeah.
If you come, see, whenever you have a daily reject daily and a 4-hour breakout, you are done with the daily time frame. You are paying attention to the 4-hour time frame. On the 4-hour time frame, what are you looking at? You are looking at some certain key levels. The first key level is the QM, OCL, and the apex. Now, the reason you are paying attention to the OCL inclusive is if QM and apex have been mitigated, so you execute from the OCL on the H4 time frame. But make sure it is also fresh on the H1 time frame. H4 fresh, H1 fresh. They are not used, then you can use it to execute. Sometimes you can use the 30 minutes. If H1 is not fresh, check the 30 minutes. Something is going to make sense there. You execute from there, right? Then now, what if QM, Apex, and OCL, all of them are fresh? If all of them are fresh, don't even try using OCL, right? Pay attention to QM and Apex. Now, you mark out the QM like this, mark out the Apex like this. When the QM is fresh on the H4, you mark it out and check the H1 for refinement. On the H1, if it is fresh, you don't need to bother about this. Just execute from the QM. But if it is not fresh on the H1, on the H4 itself, then you are also substituting this because it is not fresh. Then you now pay attention to the apex, do your refinements, and execute from the apex. I think this information is enough. So that's what happened on the USD JPY trade for the week recently. If we'll talk about that on the daily time frame, what happened was when this candle opened, it dropped down. Immediately, this candle dropped down. What I saw was the rejection from, is it this? I think it was this, right? There was a rejection from this key level. Market dropped down and rejected that day. Don't forget, it should be that day. On the H4 time frame, what happened is the market gave us a breakout. You can check the line chart for further confirmation of breakouts if you want to see. Like this, market breakout above this zone. Immediately after the breakout, now I'm active on this chart, 100%. What am I paying attention to? Remember, this zone is fresh. This zone is also fresh. So I'm paying attention to the QM and the OC and the apex. I'm not interested in the SBR here. No. Now, what do? You can use box, you can use lines. Anyhow, I've learned from so many people that is so many things. So you can box it like this, right? Now you can box it like this. Now from here, if you go into the H1 time frame and inside this box, there's no fresh H1, right? Meaning you're not going to be using this, you're going to be using this. So dropping down into the H1 time frame, you can see inside your box, there is a fresh key level off of that QM right here. So this is where you're going to be executing from, like this, your automatic execution. Now, if this zone fails, then that's when we will now start expecting this one to now hold. Very simple. This is the complete approach to the system. Then later on, we start talking about models. Model 1, Model 2, Model 3, Model 4, Model 5, which are executions that you can take within this price action. Within this price action, how you can be catching moves, right? That's where we talk about the models. But for you to catch original move, the first thing you need to do is to understand the direction and know where are the important points when you have established that direction. Okay, we can go through more and more examples so that maybe you're going to get it better and you're going to get it right before today class end. So the same thing, dropping down into S&P. These are the pairs I trade, so that's why I'm just trying to pay attention to S&P. So we'll try to get another storyline. Okay, now let's say we have a storyline that got established right here. I know. This place right here, we have a daily reject daily right here. After the daily reject daily, the market dropped down. So we have 4-hour. Dropping down into the 4-hour, this candle was also a push up, right? And then dropped down to break. So this is what happened that day. This is where the breakout happened right here. Daily reject daily around here, then 4-hour breakout. After the breakout, what are you interested in that day, that day? 1 QM, listen, 2 QM, apex. 1 QM, 2 QM, apex. Now, if I have scenarios like this, paying attention to 1 QM, 2 QM, apex. Now, if you also pay attention to scenario like this, what do you have? QM1, QM2, QM3, apex. Now, how do you execute? I'll mark out all of them. Look, one, this QM1, right? Like this. I'll mark out the second QM right here that got disrespected multiple times. This is the highest probability for me, but we'll talk about that. I have another one right here. I have another one. So the essence of model one is for you to not be confused for all of this. Anyone the market comes in to give you a 15-minute breakout, you are in model one, right? You are clearly in model one. So we'll go down to the 1 hour time frame. Now we'll now start paying attention to all those zones we have. Now, zone one, QM here, mitigated. This one is off. Look at it. Fresh. We said what? Fresh. Look at the QM right here on the one. Look at it. Mitigated, used, delete. Because you're coming from down, you're starting from down, you're going up. Because we're expecting that the market is not going to reach here. We need a reason to show us that the market is going to reach there. So we're starting from the lower one. Look, you mark it out. That's the essence of marking it out. Market has used it. You are not interested. Second QM right here. Did the market use this one? No. Where am I executing from? This QM. I'm not interested in the market going to this high. Even if I'm going to hit SL, I'm not going to be interested in the market going to this high. But these are also fresh zones, 1 and 2. But I am paying attention to this one, and that's why my sell is going to come from here. Your stop loss placement depends on what you've practiced, right? And then this is going to be the sell. That's why I say the entire approach to this to the system I have, regardless of paying attention to all other models, it's enough for you to make the money you want to make. As simple as this. Okay? As simple as this. It takes a lot of time, a lot of practice, but I know it is this simple. Come into the chart, look for rejections, look for breakouts, refine them very well, go into the chart. Simple. And that's how the sell is going to come from the security. Okay, simple thing. The entire approach to my system is daily reject daily, 4-hour key level. Okay, sorry, daily reject daily, 4-hour breakouts, or 1 hour breakouts, or daily breakouts. But the main conventional system of doing this is the 4-hour breakout, type 1, which is the best. When you have it, those 4-hour key levels are going to be used for sales. I'm not interested in going back to the daily to look for daily key level. No, it's only in situation of CRT, which we are going to discuss, that you are interested in doing that, right? But for now, okay, do that. When you do that, look at your QMs, look at your apex, look at the QMs you have available and the apex you have available. If all the QMs have been mitigated on the H4 before you even come to H1, use the most recent OCL, refine it into the H1 time frame, sell. That's for the approach to the system. And then if the lower one has been mitigated, you keep going up, you are finding reasons to go up until you decide to use the apex. Okay, so that's what you're going to be doing for now. So the same thing, we need more examples. Going back into the daily time frame, look for some reasons, look for some rejections, blah blah blah, and the rest of it. I want to see the one that is going to be a losing one. I don't like all of them to be wins and wins. Right? I want to find a losing one. So we have a rejection right here. Okay, we'll go to into the H4 time frame. We don't have a H4 breakout, so we don't have a H4 breakout. No H4 breakout right here. Let's check H1. Is there any H1 breakout? Yeah, there are H1 breakouts, a lot of H1 breakouts. So after H1 breakout, what do? You still come back to the H4 time frame. and you look for fresh H4, which all of them have been mitigated. So you don't have to stress yourself, right? So that's why you need to understand the fresh and unfresh key level thing. You need somewhat the one that is very fresh, then you can use it and just take your trade easily and simply. Let's still use the daily time frame. I'm most interested in the daily time frame because I'm an intraday trader, so I pay attention to daily time frame more. Most, yeah, the most. So we have a rejection here, which was the most recent one I was paying attention to. This one on Friday. After the rejection here, drop into the H4 time frame. Now, after the H4 time frame, just look at this. This one, the market used type 2, right? Let me adjust the market used type 2 breakout. Now, after this type 2 breakout right here, immediately this candle closed. Look, H4 here mitigated. Just the example I just gave. H4 here mitigated. No H4 fresh key level except for this one right here. This is the only fresh H4 key level. That's the one you have left. What do you need to do? Use it on the H1 time frame. Is it fresh on the H1 time frame? It has been mitigated. Then you can check the 30, which is your last resort, even though I use 15. Now on the 30, you can use it right here. Boom. Then you're going to be using this zone to take your sell down. The same thing that happened the other day. Simple approach towards the market. Just get it straight. Understand your daily reject, everything. Just understand your storyline. Now, I'm not waiting for the day candle to close. This is basically how I approach. I've seen 90% of traders wait for the daily candle to close. I don't. I am so interested in seeing it that particular day. I want to see it happen that particular day. Okay, I want to see it happen that day. I want to see the breakout that day, and I want to execute that day. Okay, maximum a day after. Anything beyond a day after, I'm not interested in the entire storyline. So you don't always often have to trade, but you just need some little information. So this is the entire approach. That's the first thing you do. Like I said, the class is about the first thing you do when a storyline starts. Okay, now the models are going to come in maybe tomorrow when we're going to have a session. Now, what if the market does not respect all these things and the market moving so fast? How do you execute? Okay. Model 1 is very associated to what we just discussed. Model 2 is continuation if the market moves so fast and leave this entire thing, which is the same thing that is happening right here currently, that the market keeps on weakening here and trying to sell. And model 3 is about simple entry model that occurred right here. I posted it on my story on TikTok. Model 4 is a different approach, and model 5 too. But for now, this alone is okay for you to use it and make any amount of millions you feel like you want to make. You're going to take losses, but when you just get it right, you can get any amount of things you want to get. Right? So I don't know whether we have enough time, but I'm going to do it one more time. I don't know.
Yeah. The okay. Well, you still want to go for another? You still want to give me another class?
No. I'm listening. I'm listening. You have a question?
No, I'm flowing with it.
Okay.
Also, what I do is that when you're done teaching, and later, if you send me the video, later
No
I will
problem.
replay it. Write out the things, and try to apply it
No
on
problem.
my trade. That's what I do.
No
Mm.
problem. No problem. So we'll
So I
try to.
prefer we just take it one step at a day. The way we're taking it slowly, so it will help me to comprehend easily.
All right. No problem. No problem. So if there is a rejection and there is no breakout, and the market reach another point of rejection, you disregard the other rejection, right? What I mean is, for example, the market rejected here. Even if the market gives a breakout and the market trade back into another rejection, then you are not interested in the previous rejection. You don't have to be interested in the previous rejection, right? Until the market gives a certain direction. I don't trade the market that is stuck between two key levels. I don't do that. I have to wait for the market to give me a certain plain direction for me to use it to execute. Okay, so we can try more and more examples. Let's see, we have a rejection right here. We'll go into the H4 time frame. Look at a breakout around here. Now, after the breakout around here, these are the scenarios where I personally, okay, me personally, I am going to be executing a different model right here. I will be executing a different model because the QM is here, okay, the apex is here. Now, I'll be paying attention to these two things still, but on the long run, I'll be using one of my model to follow the chart because the market is likely not going to come back to this place. So that's why I said how you take continuation price action, right? How you can capitalize on continuation price action when the market drop into the zone. So, but every single day you look out for a new rejection. I don't like use previous rejections subsequently. No, I don't do that. I have to look out for a new rejection every single time I have a rejection. Now, for example, on the long run when the market was moving, look at what happened. Market rejected from the upside right here. Quite all right. We saw that. Let's say the market reject from the QM. Look at this white candle. Look at the way it's rejected a little bit from the zone. After the small rejection, all of us will be paying attention to the 4 hour because we need to make sure that there's a 4 hour break before we'll be able to sell off of that zone, right? That's one of the things we need to pay attention to. Now, when the market give us that rejection, market give us a breakout type 2, but upon giving us a breakout type 2, this is what I just mentioned, you still go to the daily time frame and then look at something that happened. Upon giving us breakout type 2, the next day open, drop down. Immediately after the drop, market came into this OCL. Can you see? Drops into this OCL and then continue the push to the upside. So I'll be disregarding the sell because I was also in a bullish trend. So I'll be disregarding the sell and I'll be paying attention to the new thing, the new approach, which is market rejected from here and now give me a type 1 breakout, right? So I'll be paying attention to this particular one, and the market broke above this high. Bam. Now, after this break, what am I looking at? I'm looking at this QM, which is 1. I'm looking at this apex, which is 2. And I'm looking at this OCL, which is 3. But if all of them have not been mitigated, I am not interested in the OCL, right? I'm interested in the QM and the apex. And I am interested in the H1 being fresh with these zones too. Okay, so I'll go into the H1 time frame and I'll pay attention to that same zone. So that same zone on the H1 time frame of the QM. So you can see on the QM, this is also very fresh. So I'll use here. This is also very fresh here. So, but I'll be using the QM, which I'm paying attention to. So I'll execute aggressively from the QM and I'll let this one be. Okay. The market reached there, but you can see it was just a sniper. Then you can use this one to capitalize going to the upside. Simple approach, right? So have this, grind this, put this one inside your head. This is the entire approach to entire SLK. Anything else, okay? Anything else is going to be a model of how you can basically use structure, use this, use that, and you can go. Now, why this thing makes a whole lot of sense within this place is even about the KLR. Now, when we discuss about KLR, you notice the market gives us a formation of CRT, but we are not paying attention to the CRT because the market was not rejecting from any key level, okay? Put that at the back of your mind. So the market just dropped down. What we are going to be performing is the market breaks a certain key level, and the market need to pull back to the nearest daily key level, especially the two most recent key level. This is not yet, but yeah, it's a KLR. Then you can apply it at this particular zone. Confidently execute your buy because the confidence I will use to execute this trade for you to find textbook setups like this is hard. It's very hard. For this one, you use the type of confidence because it's a KLR that happened right there, which you are going to be discussing with time. And you'll be using this to execute like this. Few pips like this. Yep. This is how my SL is going to be, and then we trade ahead. A quick 1:6. Clean, beautiful, accurate, perfect. Okay, you don't have to be participants in all the trades. You just need to be conservative with understanding your approach to the entire market. That's why upon writing my system, I basically try to minimize so many things. Like I don't even want to teach structure and liquidity anymore. I just want a system where structure and liquidity appears on its own. All you need is to pick the right POI and liquidity is going to be there. For example, this. For example, I want to disregard the rules I used to give before when you want to trade like a break of structure, the first pullback after a break of structure, blah, blah, blah. I want you to disregard that. Now, sorry, I just noticed, I'm sorry, this QM here has been used right here. So your entry is not going to come from this QM. Can you see? So it is not fresh on the 1 hour time frame. Your entry is going to come from the apex. Now, this apex is not an engulfing buy, but it's cool if you want to be trading zones that are not engulfing. So you're going to be using the apex. So that's why the market dropped into the apex. This one has been mitigated right here. So this is basically your approach to the market. If you're trading SLK, like my system, this is your first approach. Anything else will come in the model. So this is going to be your first grind because the truth is that it's not always that the market comes here. Look at how many examples we'll be able to give. Look at the entire market now. Just 1, 2, 3, 4. Inside here, Uncle. Models they inside here. Boku, they plenty. So the models are within this price action. You will not just be sitting. That's just it. We were just able to give few examples of this. Yeah, it happens that way. But within here, the models are there. The models are there. So my approach to the market this year is very different. Did quite a lot of studying myself. Also, the approach this year, it's going to be very fantastic. So right now, I'll leave you with this information. Grind it, watch it over and over again, try to understand it, and everything is going to fall in place. Because right here, it's also a model 3 that should have sell from here, another entry from here, just sell down and just keep selling and selling and selling and selling. So we can try one more example since we have 2 more minutes. Use the daily time frame. Okay. Use on the daily time frame. I prefer the daily time frame, that's why. But you can do the same thing on the weekly time frame. You can do the same thing on the weekly time frame. So, all right, now this KLR right here, but yeah, I'm not paying attention to that. KLR. So let's use this. Let's look at this now. We have a daily reject daily right here. So we'll go into the H4 time frame. After the daily reject daily right there. Now this is where the rejection happened, and this is where the breakouts happen. This is the one that the easiest, right? The rejection happened right here, which is right here, right? And this is where the breakouts happen. And it's a type 1 breakout because this is how does this one display itself. Okay, so immediately after the rejection right there, you have this. The breakouts happened right here. Now, where are you going to be executing from? Mitigated, 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 right? Everything there has been mitigated, mitigated, mitigated. What are you doing? You're going to execute from the only remaining fresh key level because the breakout happened right here. That's why I don't wait for candle to close. My approach. My mentor even told me to wait for candle to close. My mentor, I don't wait for candle to close because the move leaves. The mitigation you are thinking of, what if the apex have been mitigated because you waited for the candle to close? Because you waited for that candle to close, then you are not going to get the right approach. Then your sell comes from here, refine on the H1, that same place you boxed. And then that's where your entry is going to come from. Just look at. You can still use this on there's an RBS OCL. We'll refine here. I will miss our entry. But this is cool. You can still use this, place your stop loss above here. But yeah, refining, we might likely decide to use this because this is fresh, this is fresh, this is fresh. So anyone you decide to use, if you use OCL, it's better. You'll be on the chart. So you sell from there. So thank you all, and thank you. I'll drop the recording right away. We have 1 minute left. So this is the entire approach to the doctor system. Then the models are going to set in. When the model sets in, everything is going to make a lot of sense to you. But this one is enough. It's okay if you can do a lot of waiting. If you can do a lot of waiting, this is very okay. And